Ronnie, welcome to Zurich again.
Hi Egon, good to see you.
I'm so pleased that you're here. Ronnie Stoeferle, a very good old friend. I mean, I've known him since he was in shorts, and he was still into gold then. An exaggeration, but a long time we've known each other, and had great pleasure at our friendship. And also, of course, you're an advisor to von Greyerz for many years, and we're very pleased to have you on the team. We both have a long history with gold, of course. I started seriously in the beginning of the 2000s, investing in gold for ourselves and people we advised at the time when it was about $300. And it led to eventually a major business and a worldwide business where we're helping people to preserve wealth, which is our passion. But how did your story with gold start, really, Ronnie? Why did you start with gold and where?
Well, you know, being Austrian, I think it's a little bit of in our monetary DNA to have some sort of an affinity for gold. So I remember that from my grandparents who lived through 4 or 5 currency reforms and hyperinflation. It was just normal for every major event, for birthday or Christmas, to get small gold coins. Yeah, and of course I didn't save them when I was a kid, so I sold them to my parents. I went to the bank and bought some toys or sweets or whatever. But I think that is one of the main reasons for this fascination for gold. And then I actually, I was always interested in the investment business. So I bought my first equities when I was 13 or 14 years old, and then I started writing for a magazine. Basically, it was all about the dot-com boom. Studied and then started working for a bank, and then actually, due to coincidence, I invested in a gold mining stock and it did tremendously well. And then I went to my boss and said, I'm having this gold mining.
So you were at the bank then?
I was then at the bank,
yeah.
And that was 18 years ago. And he said, write a little special report about gold. And gold is always interesting. And that was 18 years ago, and now I'm still fascinated by gold. I continue to say every year, okay, this year we'll write a little bit less for the In Gold We Trust report, not 400 pages, but then we end up again with so many different topics to analyze and, connecting the dots and trying to understand what's going on in the world. So that's the fascination that I have, and I always will have.
So maybe everybody doesn't know, but so Ronnie's actually started this already in the bank. Well, they didn't understand why you started it, of course, but they thought, let him do something about gold. Nobody's going to buy gold anyway, so it doesn't matter. But you started writing this fantastic report called In Gold We Trust, and it's now in its 18th year, is it? And you got how many readers?
Yeah, roughly 2 million.
2 million. It's fantastic. And this is 400 pages. This is a Bible, and this is once a year. And it's a fantastic piece of research. You probably do more research on gold than anyone in the world, actually, and know more about gold than anyone in the world. And you have a big team in doing this. And you also produce other reports during the year, graphs and monthly reports, etc. Yeah, so no, fascinating story. And now, as I said, you are the ambassador for gold around the world, basically, aren't you?
Ambassador.
There you go.
I mean, I just like to think and to talk about gold, because I think gold is one of the most misunderstood things in this world. Everybody thinks that he has to have an opinion on gold. It's either extremely positive or extremely negative. There's nothing in between.
No.
And And gold is definitely something special. It's not like in the same category like convertible bonds or, I don't know, structured credit. So it's different. It's got this long, this long history. It's no coincidence that gold is something special in every religion, in every culture, that actually on every continent, gold is being regarded as something special. But then on the other hand, coming from the investment world, and I have to say that the In Gold We Trust report is extremely dear to my heart, but actually we're asset managers, where we manage primarily assets in the commodity space, in the, of course, precious metal space, and gold and silver mining stocks. And I think for us, it's truly important to make a solid and a sober case for gold, to explain in which scenarios gold makes sense, why gold is still pretty much undervalued from my point of view. We are making, research on the optimal portfolio allocation. How does
When you mention gold now, of course, you shouldn't really have a gold interview without real gold. So this is a nugget of gold. This gold is found in this form also, and this is about 30 grams, which is an ounce of gold. And this, for most people, don't understand. This is real money. This is nature's money. It's the only money that has ever survived in history, ever. And when you talk about people around the world understanding gold, but the Western world doesn't understand it at all. And nobody understands that every single fiat money or paper money goes to zero. And of course, I often say that I think we're in the era now when we are not far from getting to zero again for paper money. We're already down 99% since 71. Nixon closed the gold window. So we're on our way. And in the West, especially, 99.5% of investors don't buy gold, which is absolutely fascinating. And you take the total gold in the world ever mined is about $17 trillion. $17 trillion, which is about 200,000 tons. And then you take the top, I think this is so fascinating, the top 10 US companies that are valued at $18 trillion. $18 trillion. So total value of gold is 17 and top 10 18. So basically 10 companies are valued at a higher price than all the gold ever mined in the world. That includes jewelry also, which means that that's the only real money there is in the world. All the rest is paper money. And still nobody in the West buys gold. I think that Microsoft is valued at 3 trillion. And all the central bank gold held in the world is just over 3 trillion. It just doesn't make sense, the value. And this is why both you and I believe that we are going to see a revaluation of gold happening not too far away.
I mean, the thing is, I think that the topic of money, everybody, tries to make a living and save some money and have a proper career and everything. But then actually nobody really knows what money is. Nobody really thinks about money and the characteristics of sound money, because it's not taught on universities. Yeah, there's actually I would say, like in the bank where I worked, and that probably applies to every financial institution, 99% of the people working there have got no clue how money is actually created.
No.
Nobody knows about the history of money, and it's something that is super interesting, and this is where I say that through the internet and also to some degree to Bitcoin, I think there's a little bit more momentum when it comes to understanding and questioning money, and I think that's a very, very important development that we're seeing. But then on the other hand, I mean, inflation is the big topic, and I think it's going to continue to be a major topic going forward. But then, you know, it's primarily being, you know, greedy businessmen being responsible for the inflation, and then of course Putin, and then the energy crisis and everything. So I would have hoped that due to, you know, this kind of endgame scenario that we're now seeing, much more people would be waking up and you know, just ask the question, why is this actually happening?
It's fascinating. You know, the gold is up about 40% in most currencies this year, and we all thought that because buying has been slow for many years. Gold goes up consistently because paper money goes down consistently, of course, in value. But you would have thought, as we were getting nearer to $3,000, that new buyers would come into gold. But as a matter of fact, everyone in the gold world, in the investment side of gold, have seen actually people selling gold rather than buying gold this year. And we are up overall, but we have seen a lot of sellers. People are just taking profits. They see it as an investment rather than as wealth preservation. Many, but and you told me something interesting about also the Austrian Mint, that they were down 60% this year. Is that right?
I don't know the exact number, but it's I just know it for a couple of gold dealers in Germany, that they're not doing so well this year. And it seems that, you know, those people that actually get it, they are taking profits, or perhaps they have to sell something because there's lots of financial stress. But then we all got used to so many crises that, you know, people got just used to that, and there's no new people actually starting to buy gold at the moment. But I think, Egon, what's really important, and that's the leitmotif of this year's report, the new gold playbook. I think we always are focusing on the Western world when it comes to gold, and, you know, we stare at the Fed funds futures and how is the CPI gonna develop, and all the political crises and developments that we're seeing in the Western world. But actually, the price of gold is more and more being made and influenced by emerging markets demand. So that's really, really important. And Chinese, Indians, people in the Mid East, in Turkey, they're buying gold because they're quite used to weak currencies, high inflation, financial repression. They don't have so many investment alternatives. And for them, and this is like I said that yesterday in one of my presentations, I said, you know, we put out the paper where we said, okay, the optimal gold allocation for a let's say like a bond equity portfolio, like a standard portfolio, would be 14 to 18% gold.
Yeah.
Now, I would say like in Western markets, it's probably like 1%, the current allocation to gold.
Maximum.
Maximum.
Yeah.
And if I say like, okay, we suggest like, let's say 15% gold allocation, I'm being ridiculed, and people just say, okay, this is way too much. If I go to Istanbul or to Shanghai and say like, we suggest 15%, people will start laughing, because that's actually too little. For them, 15% would be like the lowest allocation that they would suggest. So I think this big divergence between the Western world and emerging markets is a really interesting one, especially now that central banks have really become a major driver. Not only central banks, but also the retail crowd in emerging markets. And I think it's really, really important to focus more on the developments in emerging markets compared to the Western world. And gold always goes to countries and regions that are prospering, where there's real wealth, where there's actually capital being built up and not being consumed. And that's unfortunately not in the Western world currently.
No, and on top of that, I mean, you're saying central banks are buying. Of course, no Western central bank is buying. So is the Eastern and the BRIC countries. But of course, the US, they shot themselves in the foot from the point of view when they actually confiscated the Russian assets in Western central banks. And of course, US decided to do it, and the lapdog of Europe just follows without hesitation and agreed to that. The consequences, of course, that no central bank will ever want to hold their reserve assets in US dollars, because the US can, whenever they want, just confiscate it, as they have just shown they will do. And therefore, we will see over the next few years here, or there won't be any hurry, but central banks over coming years, and it's happening already, gradually shifting the dollar reserves to gold. And that will mean a fundamental revaluation of the gold price, in my view. And it will lead to gold going up probably by multiples, in my view. Because, this is why we see no retail buying really this year in the West at all of gold. And in spite of that, the gold price is up almost, around 40%, let's say. Which means that the main buying has been in the East and central banks. So, I always say that central banks and governments are gold's best friend, because they will always be there to destroy the value of the currency. And gold isn't going up, as we both know. It's just the money, paper money, is going down in value. And that's what gold reflects. And since throughout history, governments and central banks have always destroyed the value of the currency, that means that over time, measured in paper money, gold will always go up. And now, as I said, when central banks on top of that are moving into gold in a major way for their reserves, we are going to see such a major revaluation of gold, in my view, that this gold journey, and you just take in this century, gold is up roughly 9-10 times in all currencies. To me, we have just seen the beginning of this. I'm not a gold bug, but I'm a currency bear. And on top of that, as I said, there is a shift in investment understanding, or investors, especially central banks and BRICS countries, understanding of gold. So we will see major shifts into gold. And we know that gold cannot support bigger money at this price. There isn't enough gold. The 3,000 tons that are being mined every year, you can't mine much more, 1 or 2% more a year. So it can only the new buying can only become with a higher gold price, not with more gold being produced. And that's why people, even today at a bit under $3,000, gold is so cheap, in my view.
I wouldn't, cheap. I mean, it's hard to value gold, obviously. And this is also, I think, the main problem that people from, traditional financial markets have, because they don't know how to value it. And we did it. We don't regard gold as a commodity. We measure and value it as a currency. And therefore, we came up with this monetary model in 2020. And actually, it was pretty much spot on, because we said that at the end of this year, the price of gold should be trading at 2,660. And based on this model, our forecast for the year 2030 is $4,800. So this is based on a very conservative monetary model. Now, what we also did recently for one of our chart books was we had a look at the gold price at secular tops, which was 1980 and then 2011, compared it to the current price. And then we looked at the development of the monetary base, M3 money supply, the S&P 500, housing prices, and the dollar index. And you can tell that actually, of course, the gold price rose, and we were like 850 in 1980, and we were 1920 in 2011, and now we're trading at 2006, 2700. But actually, relative to those monetary developments, gold has still an enormous amount of room to rise. It has actually under proportionally risen compared to this enormous monetary inflation, also to the development of the S&P 500. And I thought it was interesting that when we saw those major tops, the dollar index was significantly lower. So from my point of view, one trigger going forward over the next couple of quarters could be the dollar actually entering a bear market. And I think this is what Mr. Trump actually wants to achieve. The question is, can he achieve it? But I think he wants and he needs a weaker dollar to successfully reach this reindustrialization and manufacturing coming back to the United States.
And it will happen whether he wants it or not, in my view, because the dollar as a currency has peaked. It's just that it is still the reserve currency of the world. It doesn't deserve to be it, but it is. It was supported by a strong military, and that's weakening also now. So we've already seen, of course, the beginning of the fall of the dollar, and now all currencies are falling more or less at the same rate. So therefore, but anyway, when we talk about the dollar or the euro, we're measuring gold in fiat money that's going down daily. So that's why the gold price, gold never goes up, of course. Gold is just constant purchasing power. And I often say, we should measure gold in how many chickens you can buy or how many cows you can buy, not in dollar terms. When, as I said, dollar has gone down 99% since 1971. So it just feels good. But everybody in our Western world, especially, measure their assets in the currencies which is devaluing on a daily basis, and it feels good to do it. But
this is exactly what we're doing, Egon, and some people ridicule those comparisons and those charts. The gold Oktoberfest chart, for example, where we measure the purchasing power of an ounce of gold at the Munich Oktoberfest, where one mass beer, I think the price rises on average by 5%, but measured in gold, actually, you've got a very stable purchasing power. We are both very avid skiers, and every year people in Austria, for example, complain, the lift tickets are so expensive. Actually measured in gold, you're increasing your purchasing power in lift tickets. And we did the same for the younger generation, perhaps, with iPhones. And actually with an ounce of gold, and the first iPhone was like, I think, $599, and now the most expensive one is $1,600, something like that. Actually measured in gold, you're getting more iPhone for your money. And I think that's this change of perspective is extremely important, and this is really one of the central messages that we want to deliver. That it's not prices rising; is actually the purchasing power of the dollar, of the euro, of the Swiss franc, whatever, just falling at a very rapid pace versus gold.
But you have, of course, another aspect of gold. I mean, it looks beautiful, even in this form. Is desirable, and this is what Emerson said. The what do you say? The desire of gold is not for gold; it's for freedom and security, and that's really what gold has been throughout the ages. It's been freedom and security, and that's why today people are mainly indebted and they don't have freedom and security because they don't understand the value of gold. People who've been in the crisis situation anywhere in the world and have been saved by gold, and there are many examples of that, they understand the value of gold. You have both gold and gold stocks in your funds that you manage, and gold stocks have done, well, they've done badly on average for 30 years. Do you think that's going to change?
Well, I would say that mining stocks or gold mining stocks are one of the most, let's say, challenging asset classes to manage. I mean, there's so many things that can go wrong. You've got geological risks, you've got political risks, you've got the price risk of the underlying commodity, then you've got massive inflation, you know, energy, and then also labor and so on. Then you've got probably the worst management teams in the mining space. So there's many things that can go wrong. And my take or our take has always been that it's really a top-down asset class. So you have to understand the cycle. And this is why we came up with this active aurum signal that is basically telling us when to play offense and when to play defense. So I would say that gold mining stocks they can make you lots of money, but you really have to actively time them. It's not like Andre Costolani said that, you know, you're buying those stocks, you take sleeping pills, and 10 years after you wake up, you look at your portfolio and you're rich.
How boring.
With mining stocks, you're probably you're probably gonna end up very poor.
Yeah.
And there's very few good management teams in this industry. So I would say active timing is crucial. But it's not like we regard physical gold stored in a safe jurisdiction with as little counterparty risk as possible. That's like what we call safe haven gold. And that should be like 15% of your portfolio. And then we say performance gold, that's a totally different thing, a totally different bucket from in your portfolio. This is like gold and silver mining stocks, but this really has to be actively managed.
Yeah. Of course, you know, that's where we are different. You know, we only do physical gold outside the banking system for people in 90 countries, high net worth individuals. And so our investors are great believers in buying gold for protection, for freedom and safety. But you don't need to be rich to buy gold. I mean, anyone can buy a gram or a few grams of gold, or let's say a few grams of silver, or an ounce of silver, for example. An ounce of silver costs about $30, which is nothing. So everybody can save. You don't have to be wealthy to save. But sadly, in the West, you know, when we were young, when I was young, I also got gold coins. And Switzerland is still common to give gold away for birthdays or weddings, etc., like it is in India, of course, in a big way, or in the Far East. But most Westerners don't understand the value of gold at all. Of course, we have this new form of gold now, which you can just have on a little computer stick or a USB stick, or you can store it on a computer somewhere in the system. And that's called cryptocurrencies. And a lot of people are into that. For us, it's not wealth preservation, so we don't actually invest in anything but physical gold. But you have a fund that also involves cryptocurrencies or Bitcoin.
Yeah, well, Egon, I know that Bitcoin is a very controversial topic, and I would really differentiate between Bitcoin and like all other cryptocurrencies. I think that most of them are rubbish and they won't be around in the next couple of years. It's just there's scams, there's like very shady business models. But I discovered Bitcoin in 2012, and I never thought that it's gonna become so big and that there's like the largest asset manager in the world, BlackRock, would come out with an ETF. So I think it's a monetary technology, which is still a teenager. It's still risky, obviously. But I think gold, like real gold and digital gold being Bitcoin, I think from a portfolio point of view, it makes sense, like gold for stability and Bitcoin for convexity. I make the comparison. It's like people ask me, should I buy gold or Bitcoin? And I say, why not both? You can have like your your SUV, your big Volvo SUV, whatever, which is really safe. And then you can also have like a motorcycle, a Ducati or whatever, yeah. But of course, I mean, riding a motorcycle, it's fun. It's lots of adrenaline. You're much faster. But of course, if it starts raining, if it's foggy, if it starts snowing, you rather want to sit in the SUV for safety reasons. So I would say, for example, in this new 60-40 portfolio, we say 15% physical gold, 10% performance gold, and 5% would be Bitcoin allocation. Of course, that's just a rule of thumb that doesn't fit for everyone. But I think that Bitcoin being only a teenager, I think it's doing pretty well. What I hate, Egon, is this, competition between gold and Bitcoin, because actually whoever Satoshi Nakamoto was, I think he really understood gold. He understood the flaws of our monetary system. He understood the consequences of inflation. And therefore, I think the competitor is actually, that's government debt. That's the bond market, which is 94 trillion now. I think this is really, the enemy of sound money, actually. So I think, there can be a peaceful coexistence of the both. But this is like a view that not so many people share, because in the Bitcoin space, they hate gold. In the gold space, they hate Bitcoin. We're somewhere in the middle. But I think from if you have a look at the risk-adjusted results of our two funds that combine gold and Bitcoin, it perfectly makes sense. And there's like really the hard evidence just looking at the charts.
Well, you've been right, of course, because people who bought Bitcoin early, have done extremely well and are very wealthy. My view is that Bitcoin can go to $1 million or it can go to zero, because if central banks decided Bitcoin becomes too big, central banks are not going to allow it as a competitor to their money, and they will ban Bitcoin, in my view. So and also for wealth preservation point of view, you don't want to hold your asset, your reserve asset on a memory stick or in the ether, whatever way you hold your Bitcoin, and therefore we feel safer with gold. But you are right. Everybody buys Bitcoin, nobody buys gold. Not quite, but a lot of big funds, etc. Because Bitcoin is sexier, is more in the time, of course, than gold.
And I think on our end, my colleague Mark, he's more of the Bitcoin guy, and I'm kind of the gold guy. So he's usually going to the Bitcoin conferences. But the energy that you have at those conferences is a really positive one. And I think the fact that there's so many young people discovering or understanding our monetary system, I think that makes me really confident. And there's I think when the younger you are, probably the more radical you are, and you enjoy the volatility of markets, but also the volatility of life. You hear probably different music. But then, when you grow older, you're getting a little bit more conservative. So I think, the young Bitcoiners of now, they can become gold buyers when they grow older. So I think this what we said at the very beginning, that people are now discussing the topic of money. What is good money? Is gold better than Bitcoin? I think that's a very, very important discussion.
Well, it is also for the young, really. If you take our type of client, nobody owns Bitcoin because they're older on average. But for the young, that's anything electronic, anything computer based. That's what they like or understand. Of course. Let's go over to something more interesting now for some people, like Trump. He won. I wanted him to win for number one for just world peace, and then for some other reasons also. I hate to say that the world hasn't got a single statesman, certainly not in the West, at all. There are no real statesmen today. And the Trump is not one either, but he's refreshing in many areas, and he will make things happen. And half of all of Europe hated him because that's what the propaganda said you should do, like they hate Putin also. And half of America hate him, more or less. Nevertheless, he won, and as I said, from the point of view of peace in the world, and also for having not letting the deep state control everything, just his attack now on the media and censorship, etc. And they're going to change that. I think is wonderful because, and that's of course Elon Musk, which is behind that with his Twitter, etc. It's fascinating to watch. What's your view?
Well, I thought that he would be winning, because I think that Trump really understands that traditional media isn't decisive anymore, and it's really, I mean, when I saw him going to the Joe Rogan podcast, for example, and all those things, basically that made me think, okay, he really gets it, that the traditional mainstream media isn't really where you get your votes from. It's really, you have to be present in those podcasts. You have to be, you have to have a social media presence, and I think he understood that pretty well. Now, I mean, let's say it's definitely not gonna get boring, and I think the next couple of weeks will be interesting because between now and the inauguration, he's gonna say so many different things, and I think it's a little bit naive that many people think that he can solve all the problems in the world, end every war, and make America great again, and there's gonna be heaven on earth, basically. Yeah, I think that. I also think that for, let's put it that way, I think that the problem that many people have is that they compare him to politicians and diplomats that we are used to. Mm. But he's not. He's a deal maker. He just wants to make deals. Yeah. And I think in his first term, actually, he was pretty successful with quite a lot of, especially international developments. Where I would say, okay, well, wasn't that bad. Mm. Now, I think there are some things where I have a hard time thinking or believing that he really can change so much, which is U.S. government debt, for example. It's of course structural inflationary problems. I don't think that he can, like Milei, completely change the bureaucratic system and really slash so many expenses that they have in the U.S. We'll see how it's gonna work out. But then of course he's got Elon Musk, he's got Vivek in his team, and they're definitely very interesting guys with pretty radical ideas. Is it gonna be good for gold? I don't know. What do you think?
Well, I've always had a long-term view on gold, and I don't worry about if it goes down for a month or a year, whatever it is. Of course, you have to live long enough to actually experience it. The long-term trend is so clear. As we said before, every currency has gone to zero throughout history. No currency has ever survived. So it's going to be good for gold. Trump is good for gold, I think. Is he going short term, or gold went down a little bit and the dollar went up? I don't think that's going to last. The trend is very clear to me. I think gold is going to has started a major move, and whether we have a pause for a while, I don't think it'll be very long. I think it's also linked to the stock market going up now. I don't think that will last either. I think we are in a massive bubble on the stock market. It could last for a few months, or it could last for only a few weeks. So therefore, and inflation is back. The bond market is turning. I always thought that the 40-year cycle of interest rates going down ended in 21. Inflation is back up. Whatever they say about inflation, down to 2%, which it isn't at all, of course. But the figures are manipulated. Inflation is much higher, and it's going to go up substantially in coming years. just financing the deficit is going to be such an enormous cost, and financing the debt is going to be an enormous cost, and they're not going to get it down. The political moves against every congressman or every senator is going to be against cutting down on his expenses in his area, and Trump is going to have a lot harder time than he thinks. And whether he will be seen as a good president or not depends on how the economy will perform. And since we are at the end of a monetary era, in my view, but it doesn't have to end in the next 4 years, of course, it can take longer. It always takes longer than you think. I realize that. So therefore, the risk is that that Trump, he might even be seen as a bad president if the economy really turns down, but because it's all about the economy and the stock market. But that leads to my final question is really the end game. If there is an end game, there is no end game, of course, really, if the world doesn't finish with nuclear disaster, but hopefully it won't. So there's no end game. I often take the example of the Eton College in England, which has been around for almost 600 years, still standing there strong, educating young boys. There have been revolutions, wars, depressions, and the school is still there. I mean, you could take Oxford University as the same. It's been around for 1,000 years, basically. So the world survives, with the exception of nuclear war. Hopefully, they won't be that silly. Therefore, the short term doesn't really matter. But I think that, being at the end of a monetary era, we are going to see the financial system, in my book, collapsing. That's the only way you can get rid of the debt. You can't have a new currency. It doesn't work. Because if you write off the debt, you've got to write off the assets also, and then the assets will implode. So I think we'll have, at some point, a decline of the whole of the Western system. And then you will have, of course, the sun rising in the east, and they will come out of, of course, China will suffer also. Many countries will suffer, but they'll come out of it faster. And I think that's what we're in for. Whether that takes 3 years or 10 years, I have no idea, and it doesn't matter. But if you see the risks, you protect yourself, and that's what, of course, our investors are doing with gold and your side, and Bitcoin also, but gold and gold stocks. So that's in a simple way how I see the world developing. I'm not a pessimist. I just think the risk is there, might not happen, but the risk is there. Protect yourself, and then enjoy life. That's what it's all about in my world. What do you see?
Well, I'm not a pessimist either. I think we got to be pragmatic. We've got to be realistic. And I think that, if you study monetary history, of course, every couple of decades, there's just a reset, monetary reform, hyperinflation, whatever. So that's just something normal. That's basically built into the system. And in the transformation period, and especially when a new currency is being introduced, gold always played a major role. So do I think that there will be like a gold-backed currency? And there was the BRICS meeting, for example, quite recently in Kazan, and everybody thought, okay, they will come out with a gold-backed BRICS currency. I thought it was interesting that in the final document it talked about reforming the international financial architecture not only once but actually 4 times, and I think that the BRICS countries being very, very powerful, and they've got the resources, they've got the growth, they've got in general better demographics than the Western world, and I think they just don't want to play by the rules anymore, play by the rules that they haven't actually created, that they haven't written. So I think they want to be taken serious, and I think that gold for them really plays not the central role, but an important role. And I think that going forward, I'm not sure if there's gonna be like a world dollar or a BRICS currency or whatever, or perhaps there will be like 2 or 3 world currencies basically competing with each other for years, even decades, like we had it with the British pound and the US dollar, for example, for almost 2 decades. But I think that in this kind of endgame, gold will, as always, play a major role. And this is also the main reason why gold in the Western world is still being held as the central monetary reserve. And then on the other hand, in emerging markets, they're just stockpiling gold at a very rapid pace. So that's for me kind of the end game. But I think that financial repression will play a major role. So the system will try to funnel capital into directions where it would normally never go to. Obviously financing governments. So I think that's a very important means of financial repression, you know, making insurance companies, large institutional players buy more safe government debt.
That's the worst investment you can ever buy in my view.
So, of course, but there's a coupon on it, yeah.
They're all bankrupt, and we're going to have massive inflation.
It gives you nominal returns, yeah.
Yeah, well, that's why, sadly, the investment world doesn't think.
So I mean, everybody, and that's the beauty of gold, actually. You know, you can put yourself on a gold standard.
Yeah.
Personally, and I think hedge yourself from all those pretty frightening developments that we're seeing, and therefore, you know, that's also, I think, what we both do with our companies and also with the publications that we do, just educate people and make them, you know, make them think about what is money, how can I can I hedge against inflation? Yeah, how can I profit from what's actually going on, and how can I, and that's basically what it's all about. Yeah, how can I protect my money for the next and the generations afterwards?
Yeah, and that's our passion, helping other people to preserve wealth. But of course, the very few understand it, and I say often that I've been standing on a soapbox for 25 years, and still there's only 0.5% of world financial assets in gold. So we haven't done a good job, you and I, Ronnie. But our time is still to come, because more people will realize it.
We're still young.
Absolutely, lucky for some. Some are younger than others, but. It's been a real pleasure to have you here, as always, and I look forward to many more discussions with you. And as we always say, we are in such exciting, interesting is not enough to say, but I think exciting times. And to follow this from an intellectual point of view is incredibly interesting. It's going to be tough for the world, but as we said before, the world survives everything. Except for nuclear war, and so therefore I think you as a young man will have fun for quite a few years still, and I will watch you. Thanks very much, Ronnie.
Thank you very much, Egon. Very much enjoyed it. Thank you.